Ready, Freddie?
Ready?
Okay.
Ready!
Good morning, good afternoon, and good evening. My name is Dave Grant. My co-host is Heather Townsend. This is the Playbook of the Wealthy, and today we're talking about smart tax moves to make with RSUs. If you have them, you probably want to listen up. Now, before we kick off our show, please do us a favor. Please pause the video or the audio recording, follow the show on your podcast app, subscribe on YouTube, throw a comment in, regardless of how meaningless you think it might be. We actually love it. Thank you for pausing it and coming back. Before we kick it off, we have some disclaimers, and these are going to be really fast. You ready? All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain petitions in the securities discussed in this podcast. I need to be able to breathe better.
Wait, and another disclaimer. We are not a drug company.
One time we should get professional in here to do it the speed of a drug company and just see, okay, are we amateurs? Are we pros?
Oh my gosh, you just put that into the universe. We're going to find that person. We are.
That'd be fun.
Yeah, we're going to do it. Okay.
All right. If this is your first time here, our podcast is split into 4 sections. We start getting to know each other professionally. At the end, we do it personally. We dive deep into content, and then we also answer questions. So our first segment, it is dedicated to the best character in Friends. It's called Joey Tribbiani, and the segment's called How You Doing? Heather, you want me to go first?
Yes.
How am I doing? Still tax season. I love how organized my clients are. I give them their list. A week later, they turn around, they give me all their documents in the order of the list. It's all uploaded in a single PDF. Some of them even have bookmarks. And then I send it to the CPA, and away we go. It's beautiful.
You're kidding, right?
Absolutely not. Because I tell them, if you give me a pile of paper or you just feed me a document at a time, that's not going to work. You're going to drop to the bottom of the queue. So if you want your tax return done quickly, make it organized, and I will shower you in praise.
Okay. I would say I have some organized clients and some not organized clients. So, but that's impressive. Yeah, that's how I feel right now. Tax season. I'm just in it. I'm good though, but I'm in it.
Mm-hmm.
And for anyone that's going to be boring to hear this, but I'm proud. I gave my ADV questionnaire to my compliance consultant. It's all the unfun stuff that no one knows that we have to deal with in the financial world. But yeah. So feeling
good. You took it to the dullest part of our job.
Yeah.
Let's update the ADV every year.
Yeah. I know. Yeah. Hey, but it felt good to get it done because it's so unfun. Yeah.
It is. Yeah. All right. Let's dive in. We are talking about tax moves with RSUs. First, let's actually talk about RSUs. What are they? So if you're working probably in an elevated position, this is probably not going to be your standard entry level compensation, but you are going to get stock of the company that you work for. I like to see it as it's a double-edged sword. It's a reward for you for doing a good job. It's also a retention bonus because you don't get it paid out straight away. So if you get an award in 2025, that reward is going to typically get paid out over the next 3 years, 26, 27, 28. You're going to get a third of the grant each year until it fully pays out. Nice thing being is they will then layer on top of each other because you get a grant each year. You'll get paid out in stock of your company. You can keep it. You can sell it. We'll tell you exactly what to do.
And assuming that your stock price in your company keeps going up, then as the more years you are there, the more RSUs you get, and then you have what we call the golden handcuffs.
Say more.
Say more. What do you want me to say?
Well, what are the golden handcuffs?
Like you're making so much in RSUs that it's really hard to leave.
That's true.
Yeah.
Yeah, that's that perk. I typically have RSUs pay out in, when do they do it? February for a lot of my clients. A lot of my clients are AbbVie, so that's their payout schedule. And their paycheck from January through February, it's night and day. It's just Bizarre. And then it almost looks boring the rest of the year because bonuses are paid out in March. So April through December is like, oh, it's just regular paycheck. There's nothing fun on there.
Oh, that's nice. Mine are kind of spread out. I would say some are February, March. My Amazon are, I think they're now going quarterly actually. So that's going to get really interesting. And I will say some are 3 years. Some of my clients actually with RSUs vest. Sometimes I've had like a bonus, like an immediate vest on bonus, like as a huge chunk vests, and then the remaining of the grant vests over a few years. I think it depends on the company.
Yeah, I've now started to see performance stock units instead of restricted stock units, which are coming out at different time schedules, and they're actually reflective on different metrics people are getting in their position. So they're flexible, but tracking them then becomes a little challenging.
And that's what I wanted to state to our listeners. If you have RSUs, you got to track this, and because this can be, I mean, for my clients, this is the way that we build wealth. Like, because it can be amazing if you don't count on it, right? Then it's like this extra bonus that you didn't count on as your income for living expenses and everything, and then boom, in comes this vest. And now what are we going to do with it? And I get all excited.
Yeah, the nice part, if people can live off their salary, this RSU becomes, this is gravy to your financial plan. This is a really big accelerant into what you want to do.
And I would say most of my clients, I try to do that. For some execs, that's just not possible because execs, mostly at the comp, a majority of their comp can be in stock at RSUs. And so what we do though, is when the stock vests, we go, okay, how much do we need of this for living expenses, and set it aside until the next vest, however many months till the next vest. And then we invest the extra.
Yeah. All right. Well, we're talking about taxes with RSUs. You know, we're trying to figure out how to be tax smart with these. Well, the one thing that you should be aware of is the withholding on your RSUs is typically not going to be enough. The standard withholding is going to be 22%. If you get over $1 million in RSUs, it bumps to 37. Confirm with your payroll first, because some of those rules do differ. But you're not going to be in the 22% tax bracket, most likely if you're getting RSU payouts. You're going to be in the 24, 32, 35 and above. So your withholding on your RSUs is not going to be enough. If you don't plan for it, you're going to get a big bill and penalties and interest when you come to file your taxes. So you should be doing tax planning with RSUs to make estimated payments throughout the year.
Couldn't say that better. I have seen one company with my clients give the option of withholding at 37% instead of 32. And so they got to choose. And thank gosh they did, because they got a little bit of a refund with 37.
37 instead of 32 or 22?
Instead of 22, sorry, instead of 22. Okay. But if they wouldn't have withheld, if they would have just withheld at 22 and we didn't do the 37, I mean, wow, that tax bill would have been insane. I mean, of course, I would have done, I do tax projections for my clients to make sure and say, okay, when the vest, this is how much we have to put aside for taxes. Do we make an estimated tax payment? Blah, 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 blah. But that is a huge gotcha. So no. If you're getting RSUs and a pretty significant, I don't know, amount of your comp is in RSUs, you need to be working with a CPA. You need to be doing tax projections. You need to be putting taxes aside for sure.
Yeah. I think the double whammy is if you're in a partnership, marriage, typically if you're in a marriage, if your partner gets RSUs too, now you're playing that double dip game of, okay, we're really getting far away from what our tax balance is going to be because now we're both under withheld. I had a client situation the end of last year where it was both people receiving RSUs. They both work for the same company.
Yeah.
Their estimated tax bill for the end of the year was almost 6 figures.
Oh yeah.
And it's if you're not prepared for it, that's a big chunk of change to come up with.
Plan. Another gotcha that I want to talk about outside of taxes is the wash sale rules, right? So what happens with some of my clients that come to me who have had RSUs for a while, and we should probably start with what we want people to do. But first of all, if you just are getting RSUs and not selling them, normally my clients come to me and I'm like, okay, we got to diversify. You have more than 10% of your investable assets in your company, and that's where your income is. No good. We got to start diversifying. And if you do sell some of your company stock at a loss, great, helps on taxes. But if your vesting period is in 15 days in that 30-day window since when you sold at a loss, you just offset the loss because of wash sale rules, right?
Mm-hmm.
So, there's so many little tiny gotchas that you gotta be aware of your vesting schedule for your RSUs. And typically, how I handle it with my clients, I think you're very similar, Dave, is we just sell them right away when they vest because you're already taxed. You're taxed immediately upon vest. So just sell right away. Don't accrue this huge amount of RSUs and not be diversified.
Yes. Some of that gets tricky because depending on the vesting schedule and depending on your position in the company, you got blackout periods. Yes. So one thing that I find is if, say, February RSUs vest, your blackout period for first quarter reporting might start early March and then run through mid-April. So if you don't sell immediately, you have to wait 2 months in order to sell that. Might work out for you if the stock price goes up, but if performance is not great in the first quarter and you drop 25% in stock price, that's the price you're going to have to sell it at. So, Heather, how do you deal with blackout periods?
So I had one exec client. We did a 10B51 plan. I have to remember always the numbers. 10B51 plan. Who comes up with this stuff, by the way? Like, what with these numbers? But anyways, what that is you basically sign an agreement with the custodian. At that time, it was E-Trade, where the RSUs are held, and say, I am agreeing right now for a year out, like for the next year of vesting, that I want to sell no matter what my vest at market value. And so they will then automatically sell it because you're basically agreeing before you have any of that insider information, right? You're basically saying even 6 months from now, I want to sell right when I vest. So we have put in a 10B51 plan to get out of the blackout periods and just sell upon vest.
That's smart.
Yes.
Yeah, a lot of people aren't aware of that. I wasn't aware that that was what it was called. I had to go look that one up. But I think a lot of people would benefit from that.
Yeah.
Well, if you're talking about insider knowledge, the pushback I get is, oh, the company's doing great. Why would I sell? Like it's going to the moon and it's going to do so many great things. I'm just going to hold the stock. That's where I come into my own as an advisor. I'm like, I don't care how well your company is doing. If you are not financially independent, it doesn't matter. Because if it doesn't do as well as you think, that company's taking you down. And if you've got your income, your benefits, your retirement savings, and now you're invested in the stock of that company, don't do this. You're knocking on the door of becoming the next Enron and just losing income, benefits, retirement savings, if you're in a defined comp plan, and the stock value. Like it's rolling the dice. So if people aren't independent, I'm telling them to sell everything. And if you are dead set against that, the most you can have is 10% of your net worth.
120%. I have a story of this. And I think, so I had a client, they needed these RSUs to buy a house. That their down payment for the house was in RSUs. So what's the hard part when you work for a company? Employees talk, friends talk in the company. And they were telling this client, no, don't sell. It's going to go to the moon, right? Like, so, it's the whole like, what is it when you all think as a group thinking, whatever, like.
Yeah, groupthink.
Yeah, whatever.
Sure.
But anyways, and here I am as the advisor. I'm like, okay, I get that. And so maybe it could go up. But what if it doesn't? What if it goes down 20, 30%? You don't have your down payment anymore. You can't buy the house.
Mm-hmm.
Luckily, this client listened to me. They were in a real estate company, like in the real estate world. Without breaking any confidentiality, I'm going to be kind of general here. But let's just say when interest rates started rising at the end of, what was that, 2022, that stock went down a ridiculous amount. They wouldn't have even been able to buy the house in any way. And yeah, they were entirely grateful for me. So that's also how I play it out. I'm like, well, also what if? And I think also this is where it becomes an art with clients. I try to meet them somewhere. If they really think that it's going to go to the moon, I'm like, okay, we keep max 5%. But you have to meet your targets first. You got to do your bachelor Ross. You got to do your 401k. You got to do your brokerage. You got to have your emergency reserves. Like, you have to meet all your targets. And then sure, am I going to get like all worked up over like, oh, we're keeping like 30,000 in RSUs, like out of your, I don't know, millions of dollars in Portland? No, like, fine. I'll meet, like, we compromise somewhere. So you still get some. But the other thing I also say to my clients is I'm like, okay, you have how much more vesting? This is where the vesting schedule comes. Like, if it goes up, you're going to get that share price. You're already, look at your grants that are coming. You're already, if it goes up, great. And if it doesn't, you've taken money off the table.
Yes.
Dun, dun, dun. I said my piece.
The part where it gets fun is when someone hits that financial independence or their financial freedom number and they're set. They're essentially coasting. If you want to know what FIRE is and FIRE coasting, go back to that episode. But then when their RSUs vest, my conversation to them is, I actually don't care. If you want to let it ride and it goes to the moon or it crashes and burns, it actually doesn't matter to your situation. You've done enough. If you want to sell it and put it back into your portfolio, that's great. Do that too. But from where I'm sitting, it doesn't materially impact you if you sell it, hold it, add to it. You're good. You can do whatever you want to. And that kind of fuels into the excitement that some people have of holding their company stock.
Yeah, I'd probably do a 50-50 approach there. Like,
come on.
I know that when we don't know which way, it's like, do a 50-50. Flip a coin at that point. Take half off the table, half go. That's how I always get to some compromise. It always ends up being the 50-50.
And you're always calling me risk averse. Come on. Shoot for the moon.
Shoot for the moon? I don't know.
And if you miss, you land amongst the stars.
I mean, I think this is where our clients are always so different. I don't think I have clients where they're just like good. Like, I mean, they're good, but like I don't know. What's the word you use that I don't like? Content? Content. That is not, my clients are not in the content pool. They're always like, oh, let's go after this, or let's get this, or like, I don't know how to explain it, but my clients would do something if another $1 million like fell on their lap, for sure.
Yeah, we pursue contentment at Retirement Matters. It's a big deal.
Mm-hmm. Yeah, I would not say that's saying that Townsend. Okay.
Right. Well, one story, before we jump into questions, one story I have, RSU related. So I had an executive change companies last year. So they went from one pharmaceutical company to another, and they were going to lose a lot of RSUs. So I think it's standard, but what we did is I told them to go into that contract and compensation negotiation and say, I am losing this. I need a sign-on bonus of X to make sure that I don't lose out. And they were like, okay, we need to spread it out over a couple of years because that's a lot of money. And she was like, that's fine because that's how my RSUs are working anyway. And then her RSUs started, 2 or 3 years after she started, because then she was kind of made whole at that point. But make sure that you are aware of what you're losing if you're moving from a company with RSUs and going into one that either has a delay or doesn't have any. And
I couldn't say that. I've done the same thing. I use them that's why you have to be aware of what your RSUs are, what you have vesting, what you currently have, knowledge. You have to have that data, because you can't just leave a company and just be like, oh, you're not aware of how much you could be vesting in the future and leave that on the table. You should be asking for a sign-on bonus for sure, because you are leaving money on the table if you are not aware of that.
Mm-hmm. And if you want to be tax smart about it, figure out where your comp's going to be with that sign-on bonus and what tax bracket it hits you. And if it's too high, ask them to spread that bonus out to push you down brackets this year and next year.
Smart. Love it.
All right, let's move on to what would you do? This is the question portion of the podcast where we fire questions back at each other and figure out the best way to answer them. All right, question 1. Coming to you. I'm fortunate to receive $200,000 in RSUs each year. What should I do with them? Heather Townsend, go.
Max out your Okay, this is assuming this individual is not in fire, okay? Max out 401k. We don't know if he's single, but let's just pretend he's single. I don't know. So max out 401k, do backdoor Roth, put money in brokerage, max out HSA invest, live your best life, go after your personal goals. That's what I would do.
Done. Do some tax planning as well, because $200K in RSUs, you're going to be under withheld for sure.
Yes, get a CPA. Yeah. Okay.
But yeah,
that was easy.
I think a lot of people don't actually have a plan. Like the basics of here's what I want to do with life and my money. Because if you don't have that, it's really hard to manage your money.
You have to have goals. You have to. That's what I literally said to my husband the other day. I was like, we need to go do our financial plan. We need more goals. He looked at me like, what? I was like, yeah.
You completed all the goals? You got to make new ones?
Kind of.
Or you got to get better ones.
Yeah, I mean, we're not like completely financially independent yet, but I would say that the personal goals, like we're meeting our savings goals, right? But like beyond that, what do we really want to accomplish over the next 5 and 10 years?
Big conversations.
I know, I'm excited. Yeah. Okay. Question 2. Last year I got promoted. Congratulations. And as part of my compensation, I now receive 100,000 of RSUs per year. I just filed my taxes and have a tax bill of 10,000 plus. I'm sorry. Is there a way to avoid this going forward? 120%. Dave, do you want to take it?
Not after that singing display. No, but I will.
I love it. It's just so easy.
Yes, this year's going to suck. You got to find the way to pay that $10,000. But next year, you're going to want to sit down with your CPA after those RSUs vest and you get your pay stub and you got to figure out what's going to be my balance here. Like, what am I missing from the withholding? And then you figure out where you're going to pay that from. So typically, you can get the RSUs. You may sell some more RSUs to actually pay the tax bill. And then you've got your net amount of RSUs that you can use to invest and do whatever you want to with. But going forward, you're going to sit down with the CPA after they vest and figure out what tax bill you have left.
You know, or if you have a really good financial advisor, they do a tax projection as you have big RSUs vests and tell you how much to keep aside for taxes. Yeah, so just saying.
Was that a toot toot my horn?
Yeah, toot toot my horn.
Oh.
Okay.
I should have tooted my own horn. Dang it.
Okay, question 3. I just left the job that gave me stock options, and now my new job is giving me RSUs. What are the differences between them?
All right. We're keeping this top level because you can go into the weeds with stock options because there's a few different types. But stock option, it is going to give you the right to purchase the company stock at a different price than it currently is. Could be higher, could be lower. But it's going to give you the opportunity to buy it. If you don't want to buy the company stock, you essentially just let that lapse and it's not an option that's worth anything anymore. An RSU is a stock that's given to you. It's part of your comp. So you don't have to do anything for it. You don't have to exercise anything. They give you stock on a designated timeline. So your job just got easier. You don't have to worry about, is it the right time to exercise a stock option? Is the stock price worth it? What's my financial gain? What's the different tax things? No, you're just going to get given stock and then you're going to sell it pretty much. So congratulations, you just moved to an easier job.
Yeah, I would say by far RSUs are the simple one compared to stock options.
Yeah, if you're a nerdy listener or viewer and you want to learn about stock options, go and read about Black-Scholes and you'll figure out the whole world of stock options and how complex it can get.
It's a world. It's a whole different world.
We are moving into highlights. Highlights is our personal win of the week, or the highlights of the week, given the title. So, Heather, highlights. Take it away.
I mean, I think I've told the whole world, but I learned to ski and I am over the moon. And I actually didn't work for 2 days. I didn't work on my birthday. And then I took even Valentine's Day off. It felt so good. And I went into the private ski instructor and I got asked, like, what level are you? And so I was like, level 1, maybe 1.5. I've been on skis before. I left a level 3.
Wow.
Yeah.
What makes a level 3?
I don't remember all the things, but I will say I can get down a green. Kind of.
Nice.
So I'm like, okay, I probably will get another private lesson, like not a full day, probably like a half day, but it just felt really good. And I kind of say I'm an openly manipulative person. I say this to my clients, I say this to my husband, I say it to my friends. So I pulled this off to my husband. I've learned after being married for like, I think we're on 7 years right now. He doesn't like to ski because he doesn't like doing anything that he's not good at. Okay? Shocker. So This time I was like, I want to take ski lessons. And I just bought myself the private ski lesson. I put the girls in ski school. I said, this is what we're doing. And I go, you may join me if you want. It includes up to 4 people that can join my private ski lesson. He said, no, I'm good. I'm like, great. I'm learning to also just be good with it, right? Which I'm so proud of myself in our marriage. And you know what happens after he watches the girls learning to ski and try and me get better at skiing? He goes, okay, next time I'm going to join you. I'm going to learn. And I go, manipulation worked.
And you're going to leave him behind as you go on your green run. And you're like, have fun learning, husband. Goodbye.
No, but I am like, really, I'm like, great, it works. You just got to do your thing and then it kind of rubs off, right?
Mm-hmm. Yeah, people see really it good. And then they're like, oh, I would like to do that.
Yeah. And I just felt really proud at the age of 38 that I'm trying to learn something new like that, right? Like I'm okay. I'm 38 learning how to ski and I'm actually weirdly proud about that.
That's good. Yeah, I don't know how to ski. And it's snowing outside. I should probably learn.
See, I'm rubbing off on you too.
True.
All right, personal highlight.
All right. First, for my personal highlights, you're going to have a quiz question. Yesterday at 7 a.m., what was the temperature in Chicago? Was it 30 degrees, 20 degrees, or -9?
10.
It was -9 degrees.
Of course, it was the lowest one.
It was ridiculous. Like, garage doors wouldn't open. Like, one bus broke down on the way to school because it was too cold. Like, that kind of stuff.
Well, you're the crazy one to live near Chicago. I mean, everyone says it's like the worst weather in our nation, pretty much. That's what I hear because it's so windy. Wind is the worst. Like, it was windy when we were skiing, and I did not go outside that day. I waited till it was the beautiful day with no wind, and it was sunny, and it was perfect.
Good for you. Yeah, winter in Chicago is harsh.
Yeah. No, thank you.
So the main highlight, house buying, selling saga continues. So for those who are playing catch up, me and my wife discussed with a realtor to sell the house. She was like, I think I have someone that might want to buy it. They came in 3 days later. They submitted an offer at our full ask. And they're like, we're not going to nitpick you on the inspection. We're like, just you wait. The inspection goes through and they're like, yeah, other than the fact that you told us you're getting the fireplace inspected, we have nothing.
That's like unheard of.
Yeah. And I was like, okay, really nothing? Or you're just not going to say anything? And I think someone said if they give you the inspection report and the sale falls through, you then have to disclose everything that's on that inspection report. So don't ask for the inspection report. If they are not going to say anything, just let it ride.
That's
so. Yeah, now we have to find a place to live.
Yeah, what are you going to do?
There's actually houses coming on. We're not worried. We went to see a house the other day. It was actually too big, which was a weird feeling to go into a house and you're like, that's going to be wasted space. We're not using that. There's 2 offices in the house. I'm like, what am I going to do with 2? I'm sure I can find something to do with 2, but it was more than double our square footage right now. I'm like, I'm good.
You know
That's too
what?
much.
There's something about too much space. So because then you just end up getting more crap, having to buy more furniture. Like you just end up filling it up, right? Like,
Mm-hmm.
and you also have to pay property taxes and utilities on heating and all of that on the bigger space. I'm a big one of like, have the space you need.
Were you just talking about property taxes in Arizona?
Mm-hmm.
Do people complain about property taxes in Arizona?
No, they're cheap. I think mine is like $3,000 a year.
Yeah.
How much is
The
yours?
houses we're looking, well, mine right now is 8,500 a year.
Okay. And now
My
it's gonna
house is 1,800 square feet.
same as mine's like 1900 and mine is like, so look at that difference right there.
Mm-hmm.
And Arizona's income tax rate is like 2.5. What's Illinois?
5 flat.
Yeah. Yeah.
And we're broke as a state. Ugh, don't get me started.
Okay. Yeah, now we're going down a rabbit hole.
Start pounding the table. All right. So, thank you for listening to this episode of Playbook of the Wealthy. You can find us on whichever platform you listen to podcasts. And the video version of the show is on YouTube, LinkedIn, Instagram. If you want to send us an email, you can contact us at hello@playbookotw.com. And we'll see you on the next one.
Toodles.
I knew that was coming.